After an unusually strong first half of the year, home prices in the Inland Empire have been coasting downward since June. However, looking a little deeper into the supply and demand metrics, we see trend lines that indicate price climbs ahead. How long until home prices in the Inland Empire start climbing again? That's the question we're answering in today's Inland Empire Real Estate Update for September 10th, 2025. Tune in every other week for a new Inland Empire market update, and tune in every week for new lessons, tips, and strategies for buying a home in California. I'm Jon Schwartz, your 1% commission California Realtor, and gang, it is September 2025. If you know how to use Zillow, you shouldn't be paying your real estate agent like it's 1990. Working with a lower commission, full-service agent saves you tens of thousands of dollars while giving you all the guidance and security you need through the offer and escrow process. Learn more at my website, jonsch.com. That's jonsch.com. Now let's get into the numbers. And we're looking at the most recent weekly print from Redfin for the Riverside, California Metropolitan Statistical Area. That's right here, which incidentally covers all of San Bernardino and Riverside counties, i.e. the Inland Empire. And what we're looking at is the last 4 years of data. Each year is represented by a different colored line on the chart. So the purple line is this year, 2025. The orange line is last year, 2024, etc. Right now, we're looking at the median sale price of a home in the Inland Empire. We've actually been flat at $583,000 for the last 3 weeks. This line looks like it's moving a little bit northbound, but we can see that 2 weeks ago, we were at $583,000. Last week, we were at $583,000. This week, we're at $583,000. Of course, it's worth noting that we had an unusually strong first half of the year, a little dip here as we got into June, but then we rebounded quickly. This is unusual. It's unusual to come into the year so hot and then for pricing to remain basically flat for the 6 months, for the first 6 months of the year. Of course, from June to July, we saw prices tumble down from nearly $600,000 to the 580s and now at 583. And of course, the big question is what's happening from here. If we look at the past 2 years, we see that the winter is not an especially seasonal time in the Inland Empire. Usually prices are falling as we fall off into the end of the year. However, as we can see, the Inland Empire does not follow that trend, at least hasn't recently. So where are prices going to go as we head into the final quarter of 2025? Well, for one indication, we can look at new listing median price. This is the median price at which new listings are coming to market. This week, the new listing median price of a home in the Inland Empire fell $2,000 to $590,500. Now, for most of the year, homes were coming to market in the Inland Empire at $600,000. Since June, we've been drifting downward to $590,000. And keep in mind, the new listing median price is a good indicator of realtor sentiment because realtors are setting these prices, obviously, in conjunction with their clients. But when we see list prices falling, it means realtors are anticipating sales prices falling. Speaking of these new homes coming to market, now we're looking at the new listings number for the Inland Empire. This is the number of homes coming to market each week. And this week, new listings in the Inland Empire fell 9.7% below last year's numbers. For most of the year, new listings in the Inland Empire were outpacing last year. Here's the gap between this year and last year. Then in June, new listings fell behind last year, and that deficit from this year to last has persisted. As you can see, our new listings data for 2025 is now running neck and neck with the new listings data for 2023. Now, if we recall, this time in 2023, rates had recently doubled, and sellers were not interested in selling their homes in order to buy a new home at a rate twice what they had just secured, and listings really dried up. That's the level of new listings we're seeing right now. So moving into the end of the year, if new listings continues to be depressed relative to last year, that's going to put upward pressure on pricing. That's going to keep us from having that end of year fall off in pricing that we're used to in most markets, and it's going to maintain the lack of seasonality that we've seen this year in the Inland Empire. Now we're looking at homes sold. This is the number of homes sold each week in the Inland Empire, and this really just compounds the issues we were just discussing. First of all, in the macro, we can see that 2025, 2024, and 2023 are all in a tight band of results. The last 3 years has seen, compared to 2022, far fewer home sales than we'd like to see. Obviously, in the first half of 2022, the area that I've circled, rates were still super low, rates started to climb, and that, of course, pushed sales way down toward the end of 2022, and sales have been depressed ever since. Now, when we zoom in, not literally, I need to figure out that functionality, but when we zoom in on this year, we see that homes sold is behind last year's numbers by 2.1%, but just over 2023's numbers. You can see the purple line is just over the red line and just under the orange line. So to put that in context, we have about the same number of listings as we were seeing in 2023, but we're selling more homes than we were seeing in 2023. And in 2023, price appreciation in the Inland Empire for the year was 5%. So just looking at the metrics, this suggests to us that we maybe are going to see more price appreciation this year than in 2023, which means price appreciation north of 5%, which would make the Inland Empire somewhat of a overperformer for the state of California. Now we're looking at pending sales, and pending sales is a leading indicator because a home goes pending, meaning it goes into contract about a month before it becomes a home sold. So the pending sales metric tells us where homes sold is headed in the next month or so. And what we see strengthens the trend line that we've begun to notice of escalating prices. Right now, there are 1,024 homes pending in the Inland Empire. That's over last year by 1.2%. And you can see barely that the purple line is trending upward, has been for the last, say, 3 weeks. What that means is more homes are going pending. So in the weeks ahead, we're going to see more homes exiting the market by being sold. Obviously, if homes coming into the market via new listings is depressed and homes exiting the market via homes sold gets lifted, that means there's less inventory. That means there's more competition. That means there's upward pressure on pricing in the Inland Empire. And when you put homes coming to market and homes exiting market together, you get your metric active listings. This is the total number of active listings in the Inland Empire. Right now, we're at 16,231 active listings. That's just 13.8% higher than last year's numbers. At peak in June, we were leading last year's numbers by 35%. So you can see there's been a real decline in active listings. Let's see, in terms of absolute numbers, we had 18,500 active listings. Now we're looking at 16,250 active listings, 16,200 active listings. And if this trend continues, and again, this is what we're talking about, trend lines. If this trend continues, we will fall under last year's listings sometime this fall, which brings us to our next metric, weeks of supply. This metric is my favorite. It's the most comprehensive because it looks at supply in proportion to demand. This metric tells us how many weeks it would take to buy out the remaining inventory if buyers continued buying homes at the rate they are buying them now. Weeks of supply peaked in June at 21.7 and has since fallen off to 19.9 weeks of supply on the Inland Empire market. But notice we're still well above where we were in 2024 at this time, in 2023 at this time, and in 2022 at this time. So even though the trends are moving toward a tighter market and prices growing, in this moment right now, we are still in a supply-rich market in the Inland Empire. In other words, we're still in a good place, in a good buying window, but the window is closing. And we can see it. We can see it by looking at the leading metrics. And one of the best leading metrics to tell us where the market is headed is off market in 2 weeks as a percentage of pending sales. So this metric tells us, as a percentage of homes that have gone under contract, how many went under contract in 2 weeks or less. And that percentage has almost doubled since June. Back in June, 15.6% of homes exited the market in 2 weeks or less. And now we're looking at 26.9% of homes exit the market in 2 weeks or less. This slope right here is a sign that buyers are coming back to market, they're interested in buying, and with rates newly lowered, the market is only going to heat up more as we head toward the end of the year. Right now, though, we're in a very good buying window for home buyers in the Inland Empire and throughout California. Check out my recent California update for the full analysis, and check back here in exactly 2 weeks for my next Inland Empire real estate update.